You're an E&P company. Suddenly, there's a disruption in the field. How quickly can you reschedule your resources with that spreadsheet you're using? With Actinem software, an AI-powered optimizer responds to any changes and quickly resequences the schedule to keep you on track to meet your goals.
Good morning and welcome to this week's What's Affecting Oil Prices. I'm Ashley Peterson, lead oil analyst here at Stratus Advisors. Much like the old real estate adage, location, 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 prices in the first full week of 2020 are all about Iran, Iran, Iran. Holiday movements were subdued over the past 2 weeks, but prices on Monday are nearly $2 above last week's averages, and current tensions may finally be enough to maintain that geopolitical premium. We expect Brent to average close to $69 a barrel in the week ahead, as both Iran and the U.S. evaluate next steps. There's plenty to support prices outside the political sphere as well, which could provide a floor if current tensions do rapidly de-escalate. Surveys of the latest OPEC Plus production numbers indicate that December production fell roughly 50,000 barrels a day as Nigeria and Iraq increased compliance. The group of producers committed to even larger cuts for January through March of 2020, and the latest December data will reassure markets that those cuts are on track. We've often cited this as one of the most bullish supports for prices in the first quarter. Regional tensions in the Middle East could easily lead to supply disruptions, lending further support to prices. Geopolitics will be the positive factor for the week ahead after a U.S. military strike killed one of Iran's top generals. Both the U.S. and Iran have subsequently issued further threats, but the path forward remains murky. The global economy will be a positive factor in the week ahead. A tentative trade agreement with China remains in place, and the official deal is scheduled to be signed next week. The latest minutes from the U.S. Federal Reserve also indicate confidence in the 2020 economy, with no plans to boost rates. Supply will be a positive factor in the week ahead after estimates for OPEC Plus production indicate that the group has likely cut volumes. Oil demand will remain a negative factor in the week ahead. Crude and product stocks entered the new year generally at 5-year average levels, and weak margins began to show some improvements, but this is likely not enough to significantly encourage runs.
This weekly report is an excerpt from our short-term price outlook service analysis. For more information, please contact us.
You're an E&P company. Suddenly, there's a disruption in the field. How quickly can you reschedule your resources with that spreadsheet you're using? With Actinem software, an AI-powered optimizer responds to any changes and quickly resequences the schedule to keep you on track to meet your goals.
For more Hard Energy videos, follow our social media channels.